Hello everyone, and welcome to our training video on support and resistance levels. In this video, we'll be discussing what support and resistance levels are, how to identify them on a price chart, and how to use them in your trading strategy. What are support and resistance levels? Support and resistance levels are price levels at which a security tends to stop moving in a certain direction, and it either bounces back or reverses course. Support levels are prices at which buyers tend to step in and create demand for the security, while resistance levels are prices at which sellers tend to step in and create supply of the security. How to identify support and resistance levels on a price chart? To identify support and resistance levels on a price chart, you can look for areas where the price has repeatedly bounced off or stalled at a certain level. This can be done by drawing horizontal lines across the chart at these levels and connecting the points where the price has touched or bounced off these lines. Like here on the chart. The green line is the support and the red line is the resistance line. The upper line is always resistance and lower line is the support. The lines are horizontal, but they are not usually horizontal to each other. It is because the market adjusts to both outer circumstances and traders' strategies. This results in two types of support and resistance: 1. Converging, and 2. Diverging support and resistance. Converging support and resistance lines are trend lines that move towards each other, creating a narrowing price range. These lines indicate that buyers and sellers are gradually losing interest in the asset, leading to a decrease in volatility and a potential breakout. When the price finally breaks out of the converging lines, it can signal a significant move in either direction. Diverging support and resistance lines, on the other hand, are trend lines that move away from each other, indicating an increasing price range. This suggests that buyers and sellers are becoming more active and interested in the asset, resulting in increased volatility. When the price breaks out of the diverging lines, it can signal a strong move in the direction of the breakout. In summary, converging support and resistance lines suggest a potential decrease in volatility, while diverging support and resistance lines suggest an increase in volatility. Both types of trend lines can be useful for traders to identify potential trading opportunities and make informed decisions. It is also worth highlighting that support and resistance can occur both in an upward trend and downward trend. In an upward trend, support levels are typically found at previous levels where the price has bounced off and continued its upward move. These levels can be used as potential buying opportunities. Resistance levels in an upward trend are levels where the price has stalled or reversed course. These levels can be used as potential selling opportunities. In a downward trend, resistance levels are typically found at previous levels where the price has bounced off and continued its downward move. These levels can be used as potential short selling opportunities. Support levels in a downward trend are levels where the price has stalled or reversed course. These levels can be used as potential buy-to-cover opportunities. Please remember the support and resistance to both up and down trends become either convergent or divergent. How to use support and resistance levels in your trading strategy. Support and resistance levels can be used in a variety of ways in your trading strategy. Here are a few examples. Trend following. If a security is on an upward trend, you can look for support levels to buy at and resistance levels to sell at. Conversely, if a security is on a downward trend, you can look for resistance levels to short or sell at and support levels to cover at. Breakout trading. If a security has been moving sideways for a while, you can look for a breakout above or below a support or resistance level as a potential entry signal. This can indicate that the security is breaking out of its range and starting a new trend. Stop loss placement. You can use support and resistance levels to place your stop loss orders. For example, if you buy a security at a support level in an upward trend, you can place your stop loss order just below the support level. This can limit your potential losses if the price breaks through the support level. Similarly, if you short or sell a security at a resistance level and a downward trend, you can place your stop-loss order just above the resistance level. I hope this clarifies how to identify and use support and resistance levels in both upward and downward trends. Remember, these levels are an important tool in your trading strategy, but they should be used in conjunction with other technical indicators, macro indicators, and risk management strategies. If you have any questions or comments, please feel free to leave them below. Thanks for watching.